Okay, so welcome to the deep dive, everybody. Today we are going to do a deep dive into the global economy. Like as of right now, March 2025.
Yeah.
We've got a bunch of reports, decisions and forecasts to sort of dig through here.
A lot of information.
We're
Yeah.
talking the IMF, the World Bank, UN, OECD,
Big players.
the Fed. Of course, we've got to talk about them, what they're doing with interest rates.
Right.
China's economic picture is always something we want to keep an eye on.
Absolutely.
And then what's going on over the European Union.
Uh-huh.
So our mission, I guess you could say, is to extract the key insights here.
Yeah.
Help you really understand what's happening without getting bogged down, with all the little nitty-gritty details.
Exactly. We'll handle the nitty-gritty. You just sit back, relax, and enjoy the insights.
Yeah. So why don't we start with something that kind of jumps out at you right away when you look at these reports together?
Well, one of the most prominent themes, I'd say, is this idea of global growth hitting the brakes a bit. There's a pretty solid consensus among organizations like the IMF, World Bank, the UN.
Uh-huh.
They're all saying we should expect this moderation in global economic growth throughout 2025.
I see.
Most of those projections fall between 2.7 and 3.3%.
Got it. So bit of a slowdown.
Yeah, a little bit. And one of the things they keep bringing up is this trade policy uncertainty.
Oh, yeah. That's never good for anyone.
Right. It's not just like some abstract worry either. This uncertainty really makes it tough for businesses to commit to long-term investments.
Yeah, thanks, Hans.
They hesitate to start new projects or expand when they don't know what the rules of trade are going to be a month or a year from now.
Uh-huh.
That hesitancy leads to what economists call a freeze in capital expenditure,
Okay.
disrupts supply chains. It even trickles down to consumer confidence.
So it's like this uncertainty ripples out across the whole economy.
Exactly. It throws a wrench in the gears.
Speaking of policy, let's jump over to the U.S. and the Federal Reserve. So their decision on March 19th to keep interest rates between 4.25 and 4.5% was interesting.
Yeah.
I mean, they also adjusted their forecasts for 2025.
Mm-hmm.
They're now projecting GDP growth at 1.7% and inflation at 2.7%.
Okay.
But here's the thing. The GDP growth projection is actually lower than what they predicted back in December.
Oh.
Back then, they were saying 2.1%.
So they've gotten more pessimistic.
Yeah, it makes you wonder, what are they seeing that's making them dial back their expectations like that? What could be behind that?
Well, it's definitely a signal that they're worried about a potential slowdown in the U.S. economy.
Makes sense.
There are a few factors that could be contributing to this. We're seeing some softening in consumer spending.
Okay.
And those trade policy uncertainties we talked about could be starting to hit businesses harder right here at home, too.
Uh-huh.
Plus the fact that they've actually increased their inflation projection, even with the slower growth expectation.
Yeah.
That's really raising the specter of stagflation.
Oh, boy.
And that is a really tough situation for any central bank to deal with.
Not good. So it's interesting because on top of all this, you've got President Trump being very vocal about the Fed.
Right.
He's been publicly calling for immediate interest rate cuts, especially, in light of his administration's tariff policies,
Uh-huh.
which really just highlights how political all this can get.
Oh, absolutely. It's always a tightrope walk for central banks.
Oh, sure.
Trying to make these decisions based on the data, while also operating in this politically charged environment.
Right.
This public pressure just adds this whole other layer of complexity to what the Fed's trying to do.
Yeah.
Trying to balance keeping inflation in check and supporting economic growth.
So it's like they're being pulled in all these different directions.
Yeah, exactly.
I did notice that the Fed's own summary of economic projections actually points to a median federal funds rate of 3.9% by the end of the year.
Okay.
So even though they held steady in March, that suggests they are thinking about making a couple of rate cuts before 2026. That expectation of future rate cuts kind of feels like a signal that they're ready to act if things start looking worse economically.
Yeah, they want to have that flexibility.
Right, but at the same time, they got to stay focused on inflation right now.
Exactly. It's a balancing act for sure.
So with all this global risk and uncertainty around trade in the picture, let's shift gears and look at how China is responding.
Good idea. They're such a major player.
They've set their economic growth target for 2025 at around 5%, same as last year.
Okay.
And to get there, it seems like they're launching some pretty big stimulus measures to try and offset the impact of the U.S. tariffs.
Right.
So what are some of the things that stood out to you in the reports?
Well, the scale of their planned response is pretty remarkable. They're issuing 1.3 trillion yuan in ultra-long special treasury bonds.
Wow.
which is already more than they did last year, and then they're allowing local governments to issue 4.4 trillion yuan in special debt.
So that's a lot of money.
It's a clear sign that they're really committed to propping up economic growth, even with all this external pressure.
So they're basically saying, full steam ahead, we're going to hit that 5% target.
Pretty much they're taking the challenge seriously.
Now, there was one thing I didn't expect to see.
What's that?
China's plan to pump 500 billion yuan into recapitalizing major state banks.
Right, that was unexpected.
So what do you make of that move? Why do you think they decided to do that?
Well, recapitalizing those banks basically means giving them more capital to strengthen their balance sheets.
Okay.
And that will then help them lend more money.
Uh-huh.
So it seems like a pretty proactive effort to keep their financial system stable, especially with all these international economic headwinds. And then you've got the domestic challenges, too.
Right, like the real estate problems they're dealing with.
Exactly. They need a healthy banking system to keep the whole economy running smoothly.
So they're working on these internal problems like the property market, but at the same time trying to boost other parts of their economy.
Yep.
And they're trying to do all of this with these trade tensions looming in the background.
It's a tough balancing act for sure.
It really is. Okay, let's hop over to Europe now.
Okay.
So the European Union is actually forecasting a bit of a pickup in their growth for 2025. They're projecting 1.5%.
A little bit of an increase.
Yeah, it's up from the 0.9% they expect for 2024, and they're attributing it to rising household incomes and a pretty strong labor market.
That's positive news, right?
Yeah, I mean, that projected improvement in EU growth is definitely encouraging.
Definitely.
And that resilience in their labor market is a key driver there because it helps support consumer spending and just overall economic confidence.
Yeah,
And even a small increase in household incomes contributes to a better outlook.
for sure.
However, the European Central Bank seems to be a little bit more cautious.
Oh, really?
They're pointing to all this geopolitical and policy uncertainty as reasons why the recovery might not be as quick as some people are hoping.
Yeah, that makes sense. I mean, there are a lot of unknowns out there.
Right, so the ECB's more cautious stance just reflects the risks that continue to kind of hang over the global economy.
For sure, you've got those geopolitical tensions, you've got the possibility of more policy shifts.
Yeah.
All that can definitely slow things down.
So they're basically saying, hold your horses, let's not get ahead of ourselves.
Exactly. Wait and see how things play out.
Now let's talk about inflation in the euro area.
Okay.
According to Eurostat, back in February, it was sitting at 2.3%.
Okay.
And the interesting thing is that services seem to be the biggest contributor to that annual inflation rate.
What do you think that means?
Well, it means that services inflation is pretty sticky.
Hmm.
You know, it's not going down as quickly as other types of inflation. Services are often less affected by those global supply chain problems that we've been seeing.
Right.
So this persistent inflation in the services sector suggests that there's still underlying inflationary pressure within the euro area.
I see. So even though overall inflation is easing a bit, there are still some pockets of concern.
Exactly. And that's definitely something the ECD is going to keep a close eye on as they decide what to do with monetary policy going forward.
Makes sense.
And one last thing to mention about the EU is that they're really focusing on ways to make themselves more competitive through deregulation.
Oh, interesting. So they're trying to make it easier to do business there.
Yeah, exactly. They want to create a more attractive environment for businesses.
So it's like a proactive strategy to try and boost their long-term growth potential.
Exactly. And they're hoping that by streamlining regulations, they can encourage innovation, attract more investment, and ultimately increase productivity across different sectors.
Makes sense.
So as we wrap up this look at the global economy, in March 2025, there's some really clear themes that emerge.
Yeah, what stands out to you?
Well, first off, we've got this general slowing of global growth, which is being heavily influenced by all the uncertainty around trade policies. Then you've got the U.S. Federal Reserve walking this tightrope between inflation worries and a potential economic slowdown. And they're doing it under a lot of political scrutiny.
It's a tough spot to be in.
And meanwhile, China is pushing ahead with these huge stimulus measures to try and hit that ambitious growth target of theirs despite all the external pressure they're facing.
Right.
And lastly, the European Union is expecting a gradual recovery. But they're also facing their own set of challenges, and they're looking to these structural reforms to strengthen their long-term outlook.
It really is a fascinating time to be watching the global economy.
It is. So here's a final thought for everyone listening.
I like it.
Given these different regional strategies and all the uncertainty around trade, what do you think are the biggest potential surprises that could really shake things up in the global economy over the next year?
That's a good question.
What are those unexpected events, those black swan events that might be
Mhm.
lurking just around the corner?
Yeah, those unpredictable factors that could really change the trajectory of things.
It feels like we're at a point where there are so many forces at play that the potential for something unexpected to happen is really high.
It definitely does make you wonder what the next year will bring.
So much to think about. Thanks for joining us on the deep dive, everybody.
Thanks, everyone. See you next time.